Welcome to a huge bearish market that we've recently are getting ourselves into, and yeah, it's going to hurt a little bit. So when we're starting to look at, as a long investor, and you're looking at some of these stocks and companies, they are having some trouble right now. So we're going to take a look at a couple of these companies. I've got a white background in this case, so I had a curious question. Let me know if you like the white background or the dark in the future. Personally, I like the dark for my eyes, staring at the screen a lot, but some people do like the white. So let me know what color you guys prefer. Anyways, what I want to show you here is as we go into some of the tech companies and we pull up things like Google, what I've got is a few moving averages here. And with those moving averages, what's happening is that in the past, when we looked at these types of companies, they're flowing really well, and meaning one is stacked on top of the other. Then now recently what's happening is they're starting to cross one another, and that's usually a bad sign and some negativity. So if we look at Nvidia, what happened here is when you're starting to look at these lines, these moving averages, you can see how they're flowing really smooth. Now, unfortunately, what's going on is we've got a little chop and clutter, and because of that, we're getting some sell side action and sell side pressure. So this is not good. So when we're starting to look at these things, bringing it back to Google, we are looking to possibly start, again, getting some clutter. And when you're getting into the clutter of something like a Google, now you're looking for a possible trend on the downside. Now we're looking at the daily chart right here. This stock based around in 2023 around that $90 level. So we had kind of a base. We climbed and grinded up to about 140, which is a pretty significant grind in the past here. You could see it was right around 150. So we got all the way there, and now we've got this selling pressure that's coming right in. So where could we come back to? We could easily come back to 110. I mean, just think about it. We went up for 2023, most of 2023, and now we're coming back into a pullback. So it's not to say this pullback can't last for a couple of months, and then we'll come back higher. So that's possible. What you have to remember is that not everything goes straight up right away. Even in the past, in 2022, if you look at what happened here with Google, take a look. We had this long downtrend for 2022. And as we start backing it up, yeah, we did have a pretty good trend from 2020, okay, right there. And then 2020, 2021 all looked good. And then we had the pullback, which came down to about half or 50%. And then we powered higher again. So we're powering higher. We could come back about 50%. That puts you at around 110, and then you could push higher again. So that's possible. That's what we're looking at here. Again, with prices kind of struggling a little bit recently. So as we take a look here, I've got Google. It's down. It's 122 right now, 25. So not doing so hot or well. If we compare it to some of the other companies right now, we'll pull up Microsoft here. Let's take a look at that one. Microsoft, we've got Apple. IBM is the one that's up because we've had earnings. Amazon also down. I think it reports today. And as you can see, Google's down. So even Microsoft's down $11. Wow, it moved quite quickly compared to what it was before. So we had a pop on Microsoft here on earnings the other day, and now we're having this pullback. So that's quite significant when you think about it. Had a big jump, pullback. I just want to take a look at some of the day-to-day action. So you can see we've had a little stability here the other day, and all of a sudden today we're just tanking. It's just getting hammered. And that's one of the other reasons why some of these tech stocks are pulling back. Again, looking at this daily, you can see right here we had a nice flow of movement and price action and buying coming in. So this was this zone. And now what we've got is a lot of this chop and clutter. So right here, probably a good place to do iron condors if you're doing like options and that kind of thing, although the volatility is a little bit heavier. But you can see what's happening is that the flow, the smoothness is not really there. Even take a look at things like, we're going to pull it up, like Shopify here. And if we go in and look at Shopify, here's kind of what I've got in this case, and that's one of the levels I was watching earlier in the past. But you can see this has a pretty significant breakdown right here. Okay, so there's another break. I thought the support could hold around that $50 level. I was watching it to kind of get back maybe into 62, 64. Obviously, that's not panning out right now. But here in the 50, it's possible I thought it would hold, but now we're breaking down. And the volume that's coming in also on the sell side is fairly significant or strong. So again, this doesn't look good from a price perspective. And it's quite possible that this, as we look into the stock, could come back into these lower levels, possibly around that 43 level, because you've got some support right here around that 42, 43 level. We've got these areas right here. So if we come back into this zone and then bounce, that's another thing to kind of keep an eye out and watch. So that's what I would look at for this one. Nvidia is also struggling a little bit on the same type of issues. Really, this stock, again, powered really well for 2023 when we start looking at it. And now we're starting to get some chop, especially since June. It really just between 360 and kind of that 480. It's been kind of going sideways, a little bit up, a little bit down, a little bit up, a little bit down. So we're just kind of getting that sideways pressure and sideways action. So not looking too well there. If we pull up some of the stocks related, you've got AMD also down, Intel, Vago, Broadcom here, and Qualcomm. Qualcomm's actually doing going to the upside, so that's pretty good. So anyway, so as you can see, also chopping around, and related to here is look at AMD. We had AMD pretty significant run here over those few years, and then we had this pullback. Then we're trying to come back up, and again, a little pullback. Now, it's possible we could get back into that area. AMD's just been doing quite well overall, but nevertheless, here's our kind of upward trend right there, and there's the support, support, support. We broke it, got into it, rejected that, and created it as resistance, and now it's not really hanging in there. So this is what we've got, is we've got this downward channel here inside of this upward channel that's also being rejected. So you got kind of like a double whammy that's not looking good. So I think we've got a little bit of trouble there, and you know, it's you got some huge sell-offs happening right here in these companies. So the other one I want to take a look at is one of the big names here is Apple. Apple also trending and to the downside and struggling. Again, had this nice move to the upside with some lines and channels, meaning a nice flow to the movement. So as we have this nice flow to the movement, we had the breakdown right there, stock sold off, and then now we've got this downward movement and choppiness with the moving averages also happening, which is not good. And you're creating lower highs. With those lower highs not looking very good. So also pushing lower. You do have earnings on this stock on the 2nd of November, I believe. But even here with these support levels right here in this area, broke it, breaking. So definitely not good. And it's definitely trending to the downside, trending a lot lower. So what we've got is a few issues here on these stocks. One of the bright sides here that I was looking at, Netflix kind of pushed a little bit to the upside. We'll see if it can hold here. We powered higher into the move, but we've got a little bit of now a little bit of a pullback. So we pushed higher with the earnings. That looked good, and but now we'll see what's happening. Here's some related companies and tickers to Netflix. You got Disney also struggling here to the downside. If we look at it, I mean, it's on a week to week, even on a month to month basis, Disney's coming in. I was looking for support around 85, and not getting it, starting to break down. I think it's possible this thing could get into about the $60 level. We got into the 200s, but imagine this, they're creating payment plans on a yearly membership, and it has blackout dates. I'm like, you know, back in the day, I used to go to Disney. I lived in Florida, and it was like I think 39 or 49 bucks to go attend Disney. Now I think it's around 149, and now they're getting into the 250 range. Plus, you can pay, you know, monthly like X amount of dollars, so that way you can attend. And it's just like, man, wow. They're starting to charge interest on these things too, I think, or something. So it's getting pretty wild here with payment plans, and they're trying to collect money as best as possible. So anyway, the stock's struggling a bit, but I think you're getting to that point where you are probably oversold or near there. I mean, it's struggled quite a while. You'll probably get into that $50-$60 range, and you'll see some good things coming out of it, I would say, eventually. Or just the value is it's like, hey, it's pretty cheap. So these are some of the ones that I was kind of watching. Again, you still have some of these struggling stocks like CVS, still a lot of problems, a lot of issues here, resistance around these levels, right about 75, 77, 78. Those are kind of the resistance zones. You've got support around 65. So stocks kind of holding those levels, but still just sideways action. Nothing. I mean, the markets don't trend always to the upside, but look at what's happening with some of these companies. You've got downward moves, and then you've got some nasty here, A to B, B to C, C to D patterns, and then you've got more chop right here. So there's a lot of these companies that are just really struggling to kind of maintain its own. And even here, Nike was doing well the other day, or this last week. So you can see we had this nice move to the upside after this little pop in this area. But now again, breaking down almost 3%. So if we take a look at that one and we pull that up, let's check it out. We've got a few companies here related to Nike, UAA, Under Armour, up to, and then Kohl's and Foot Locker. So still, weak overall market. If you look at the SPY, we are coming back slightly from down about 50 handles on the SPX. And I think now we're only down 40, 30. So point being is when we start looking at this, it's, markets acting weak. And now that when we look at the SPX right here, we broke down. This was a critical line. We broke through this level and broke down this, and it's continuing to move lower. It's not looking good. So again, same concept. We were moving to the upside, and now we're rolling and rotating over and breaking this too. So that pushes this possibility, if we let's go back to the weekly, pushes this possibility back into, so here's kind of our previous levels, breaking this down. You have this upward momentum as well, but I think you're looking at maybe 3,700 to retest. You've also got some 3,800 zones right there where this market could go. So that's kind of coming back to 2022 levels, going for that sideways area. So this could be some support in that zone, but we'll see. We could get some chop in here for a while and see how things digest. Anyways, that's what I want to share with you. If you want to learn a little bit more on the technicals, check out the latest course, Mastering Technical Analysis. Highly encourage you to do that. Other than that, check out the Traders Fly site. There's a lot of free courses on there as well, blogs, posts, PDFs, freebies, lots of good stuff. So check it out. Thanks for joining me, and I will see you on the next video. Take care.